Hello from Moted Markets. This is Ahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week number 12 in 2025. As always, first check and review the previous week, and then we can go further and check the week ahead. Previous week, generally we had a strong labor market data. After NFP data, we had the NFP also was fine. And the last week we had 2 weeks ago, and the previous week we had the GLTs with more than expected new vacancies that we had in the U.S. labor market. Generally, we had the labor market strongly, but on the other hand, inflation was showed some sign of the weakness with falling to 2.8%, the headline inflation. Out of the U.S. Bank of Canada cut the rate by 25 basis points to 0.75%, and generally the inflation numbers that we had from Brazil and some other developing economies and developing economies, generally they showed that inflation after several months of increasing, generally across the board, inflation is falling down, same that we had in China. But the week ahead focus will be on the central banks, especially the central bank, the United States, UK, Japan, and many other countries. Let's go for one by one. The focus of the week will be in Federal Reserve meeting, which is we know that the Fed meeting will start on Tuesday, and they will have a 2 days meeting. On Wednesday, it's going to finish, and we're going to have it will be finished, and we're going to have the Federal Reserve monetary policy statement and dot plots. I'm talking about the dot plots because this is the meeting which is going to be at the end of the first quarter and the beginning of the second quarter. So usually we know that usually in these meetings we have the dot plots. Since the market's already priced on not holding the current rate at 4.5%, the market's focus will be on dot plots and press conference. The dot plots, why it's important? Because currently we are counting on two more rates cut, actually generally 2 rates cut in 2025. But with the effects of this trade war that right now we have, and also the U.S. new policies about the government's employment, maybe they cut some of the government's jobs. So if the central bank become to this point that maybe these policies can affect the economic growth and the labor market, maybe they talk about the more rates cost, more than 2 rates cost. So the statement and the dot plots, they're going to be, that's why it will be important. If they do not change their expectation from the inflation and the interest rate, it means that they are still the hawkish. It still has the hawkish tone, so it's going to support the US dollar and put the pressure on the stock market. But if they talk about the possible of the third rate cut, that's going to be dovish somehow the stance, and maybe we can have some pressure on the US dollar, but it's going to be the positive for your stock markets in the stock market in the United States in general, not just in the United States, it can affect other markets as well. So that's why this dot plots they are very important, and the projection of interest rate, inflation, and GDP unemployment rates, they're going to be very important to be watched. But besides that, we have the other important economic data from the United States also to watch, like initial jobless claims, like that we have, especially the retail sales. The retail sales number we're gonna have probably on Monday. Yeah, the retail sales from on Monday is very important. After November and December, strong retail sales that we had in the United States, and not just in the United States, in most economies. January and February retail sales was weak. The January retail sales was weak. That's why we are expecting right now to see the strong retail sales on February. We are expecting to see the retail sales to increase by 0.7%. About the lower retail sales in January, previously I talked about that, why in January usually the retail sales are weaker, because November and December always we have more people they are buying more stuffs, more products, more tourist services and stuff like that, hotels, and in January usually they are out of the money, so they are not spending too much. So that's why the retail sales is falling usually in January, but again in February it's increasing. So that's why when in January we had the weaker retail sales, we talked about that. That is seasonal, so it's not an important number to be watched. So that's why we can see right now that in February, again, the retail sales can increase by 0.7% on the monthly scale and more than 4% on the annual scale. So that's generally is going to be the positive news for the US economy before Fed meeting. But out of that, we have the housing market numbers as well before Federal Reserve meeting. Generally, we know that housing starts and housing new home sales, it was slightly weaker in the previous month due to increasing actually of the mortgage rates. But right now we know the mortgage rates again they fell under 7%, under 6% for different periods. So that's why we are expecting to see again the housing start and both new home sales to to increase again. Out of the US, we have the central banks meetings in let's start from Asia. At Wednesday, same day that we have the Fed meeting, before Fed meeting, we're going to have the BOJ meeting. The Bank of Japan also is expecting to hold the interest rate at 0.5%. The thing is that right now we know that inflation recently increased in Japan. So now that we are talking that, I mean, the analysts talking about that the possibility of more rate hike actually in Japan. We are right now expecting two more rate hike in Japan by 2025 by year end and see the interest rate at 1%. But the statements are going to be very important, but right now we are not expecting any changes in this meeting. But the tone of the statement and their expectation of when this interest rate hike going to start, they're going to start hiking. They will hike the rates on February meeting. April meeting or in September meeting. In which month they're going to increase their rates? It's going to be very important, and the statement will give us more sign about that. That's why the interest that's it's important. But generally, we're expecting to see the hawkish tone in the statement, and that's going to support the Japanese yen. Since we started from the Asia, let's start continue by that on Friday or on Thursday. Thursday, we're going to have the central bank meeting in China as well. PBOC is expected to hold its 1 year and 5 years prime rate at 3.1 and 3.6%. No change in their rates because they are already the historical low levels. And generally, we know the economic condition in China is not so good as it's expected. So the fear of the bad increasing the bad loans and the funds of if they or other reason that maybe the banks will have enough funds to give the loans. That's why they got the fear of these options. They're going to have these two reasons. They're going to hold back the central bank in China to cut more from the more rate cuts. But generally, we are expecting to see that dovish stance in the statement, and most probably they're gonna change some other settings in the policies to support the economy. So we are expecting to see some dovish stance in the statement without rate cuts. If we come at the same day on Thursday, we will have the central bank meeting in United Kingdom as well. Before central bank meeting, we're going to have labor market data. We're expecting to see the unemployment rate to increase to 4.5%. And average income to increase by 5.9%, to repeating the same number in January. The same number in January for February as well. But the thing is that for UK, we will focus on the central bank meeting. The labor market is weak already, but the inflation is increasing, and with the policy of the new government, with the financial policies, economic policies, that's we are expecting to see that support. That lead the inflation to grow further. That's why the central bank will have no choice to hold the rates currently. But on the other hand, economic data were very weak in the previous months. So there is still the chance, while the market mostly counting on holding the current rate at 4.5%, but still there is a chance of rate cut. So the number of votes for how many members they're gonna vote for the rate cuts or holding the current rate or increasing the rate hike. These number will be very important, and most probably we're gonna have three they vote for holding the rates, and from out of this nine, so six votes for cutting the rates. Sorry, six votes for holding the rate and three votes for cutting the rates. But the number of the ratio of these numbers will be very important, and will show that the tone of the statement in the tone of the statement of this meeting as well. Generally, we are expecting to see the dovish tone in the statement, even if they don't cut the rate. The dovish tone will support somehow the stock market slightly, but not so much, because the economic data was weak in the United Kingdom. But it gonna put the pressure on the British pound, which was somehow just like recovering in the previous weeks, but it's gonna be more under pressure again. On Thursday that we're gonna have the BOE meeting, on Friday, or yeah, it's gonna be the Friday central bank meeting in Russia, or another day. We're gonna have the central bank meeting, Russian central bank meeting as well. We are expecting to see the CBR, Central Bank of Russia, to hold the current rate at 21%, where I'm trying to find it on the economic calendar. But generally, the Central Bank of the Russia are going to support, they're going to hold the interest rate at 21% with no change. We don't expect the Russian Central Bank already increased the rates at its historical high. Not the historical, I mean, before also we had, it's not the all-time high, but historically, it's a high level of the interest rate in Russia. There is a chance also to cut the rates, but since the Russian, I mean, we know that because of the ongoing negotiation of the peace talk negotiation right now, the Russian ruble got stronger against US dollar, fell to 85 from 106 that we had 2 months ago. So that can give some more I mean the believe, or some more confidence to policymakers to cut their rates for now. Well, that's going to support, most probably they're going to support the interest rate cut in, I mean, we're going to have the interest rate cut, the chance of the interest rate cut in Russia as well. But overall the market counting on the holding the current 21% rates. These data were the most important data to be watched in the week ahead. But let's check the charts and see with these data what we can expect from the charts. As checking the US dollar chart, we can say that the US dollar was falling in the previous weeks faster was falling in the previous weeks from 100, almost 10, fell to 103 mark. But now it sounds like it found some ground around the 103 marks, and now the market is starting counting on the recovery on the US dollar. Technically, it's about that, and fundamentally also, most probably with the central bank meeting, we're going to have the slightly hawkish stance and the tone and expectations. That's why we're expecting to count on the US dollar recovery. But this recovery wouldn't be so fast or so strong. But US dollar downtrend, it sounds like ending around 103 for now. That will be at the same time on the stock market. We know that the S&P 500 and other US indices was falling sharply in the previous weeks. Sounds like S&P 500 found some ground around 5,500, and now it's time to have some recovery, but it's not going to be more than 5,850. Most probably before Federal Reserve meeting, we will have some recovery in the stock markets in the United States. But after the meeting, most probably, but it's depend on the meeting results. But with our expectations is to see again the stock markets in a downtrend, slight downtrend, after having some correction before Federal Reserve meeting. So that correction can support the correction in the US dollar and the stock markets, will put the gold slightly under pressure. So we're going to have some correction in the gold price as well. The gold maximum correction could be around 2,960 around these levels, and but right now we cannot see more correction than that. We know the gold was increasing so rapidly in the previous week, so now after the correction, still the overall in the bigger picture, the overall outlook still is the positive for the gold, and we're still optimistic about the gold and further. But about the oil market is a little bit different with the pressure of the U.S. government on the Iranian oil production and oil export. We had some correction last week. With continuing these geopolitical tensions and overall outlook for the demand, we know that the previous week we had a monthly OPEC report, and the OPEC, they didn't lower their demand expectation despite the trade tensions, but still they have a higher demand expectation, which means we supported the oil price as well. Generally, we're expecting to see the oil price still side movement around 67 and $70 around these levels. As for the cryptocurrency market, lowering the escalation and the tensions would be negative for the cryptocurrency market, but it wouldn't be that much. But generally, with we know the BlackRock and some other institute, they again started to buying the Bitcoin in a lower price around 80,000. So now with these expectations, we can say that Bitcoin Bitcoin and other cryptocurrency market, generally the market condition still is a positive, and we are technically also $80,000 became a very important level for now for the Bitcoin. Above $80,000, we are positive to see further levels around 85 and then 88 and $90,000. They're going to be the next steps. For now, we are positive for the cryptocurrency, especially for the Bitcoin. This is generally it was the market expectations and outlook, what we are expecting from the previous week, what we had the previous week, and what we're expecting for the week ahead. If you had any other question, don't forget to write down in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye bye.